Ladies and gentlemen, good afternoon. It is a pleasure to be here for the 4th Virtual Investor Forum. Last month, we featured Mr. Derek Cottrell, who enlightened us on the hard work that goes into Derrimon Trading Limited to maintain its position as a top-performing company during the pandemic. This month, we are inviting yet another special guest, Mr. Christopher Levy, who is the President and CEO of the Jamaica Broilers Group Limited. He'll be speaking on the 2020 performance highlights of his company. Mr. Levy has been involved in the poultry industry for over 38 years. He currently serves as a director of the Jamaica Broilers Group Foundation, the Solarfield Chapel Outreach Foundation, Global Orphan Project, and Stony Brook School, amongst others. I welcome Mr. Christopher Levy to our 4th Virtual Investor Forum. Chris?
Hey, Gary.
Good to have you. So he's going to speak about the performance highlights of the Jamaica Broilers Group today. So I turn over to Chris.
Well, I think that as we move through this COVID time, it's a very exciting time because it's challenging what I'd call the broad model of the organization. It's challenged our decision making. We've had to really get into a space where we can be quick, where we can be effective and efficient. And I think it has really galvanized the team in a special way. Without a doubt, the Lord has blessed us and protected us through this. We've seen our inventories go up. We've seen our inventories come down in short order. But the fundamentals and the strength of the company and the resilience that we've seen is nothing short of overwhelming. And without a doubt, we are very excited about the future. We feel that the foundation of the company is strong. We're seeing very good markets in all of the areas that we operate in. And without a doubt, the folks that are involved with us are also excited. You know, the challenge that we do see is how do you maintain that fluidity of decision making and keep it relevant to where you are, because it's very easy to kind of think that this is the space that we're going to operate in, and it's not. The economy is going to change, both here in the United States and in Haiti. And it's really keeping the guys and the ladies and gentlemen there on the ground and very astute to their environment and being aware of what's happening and what's the right decision. Without a doubt, the board has also had a tremendous role in this, and it's just a great honor to have such wisdom around when these times hit. So we're excited. We're looking forward to the next couple of years.
Thank you, Chris. So we're going to do things a little bit differently today. We're going to get to the meat of the matter because there's several questions that myself, my partner, Chris, and the social media world out there wants to put to you to get a better understanding. So instead of using the traditional way of, you make a presentation and stuff, we get to the meat of the matter.
Sure.
No pun intended. The chicken meat of the matter. So what I want to first do is to welcome Mr. Christopher Berry, the chairman of Mayberry Investments, who is also here. And what we're going to do is I'm going to place my first question to Christopher Levy, and then Chris will come in and we go through the night. So, Chris, first question.
Yeah, man.
There's a widespread perception of a chicken shortage throughout Jamaica. Is the company seeing a supply-demand imbalance due to the unpredictable effect of the COVID pandemic over the last few months and going forward?
Yeah, I think without a doubt there's been a tightening in the market. The volatility that we've seen in demand and the rapid change in the demand curve has without a doubt either pushed our inventories up or pushed them down. We've also seen small farmers enter the market, come out of the market. They're a big player. They're about 30% of the industry, and we've seen them enter, and we've seen them come out, and now they're getting back in. The challenge that is there is that the time between the market change and getting the live birds to market, the processed birds to market, is roughly about 9 weeks. And so your response has to be very, very quick and very sensitive to it. I think we're going to see relatively good production through Christmas. The inventories are looking good, and I think without a doubt there is a balance coming back into the market. So I think that's part of why we're so optimistic about the next several months, you know.
Thanks, Chris. Mr. Berry, you have any questions for Mr. Levy?
Yes, I have a follow-on question from Gary's question. So, looking forward into the Christmas season, based on what's been happening with COVID, how do you see demand for the next 2 quarters? Are you expecting it to be as robust as it was last year, or what's the delta on that?
I think let me approach that one a little different, Chris, to get you an answer. In terms of the various segments, we've broken it out into the various segments that we supply. When we look at the hotel, restaurants, and what I would call fast food segments, we're very, very those segments are very sensitive to the government policy in terms of the opening of the economy. And those is what will change this demand curve. We feel that the local demand for product is pretty much locked in. Where you find that demand curve and it can only change for the better, is a relaxing of the curfew hours, which will increase our economic times, and also a robust tourist season. And what we're seeing and what our feedback is that the potential for a robust tourist season is there. I think we've got to look at this as a nation and as the leaders in this country in a very dispassionate way, because opportunity for the country is important. And there are new technologies in terms of testing. There's ways to handle it and protocols that can be observed that allows us to take this opportunity through this season. We have to be fast and decisive, and I think that we've got to understand that the situation we're in as a nation is not a sustainable long-term situation. It's just not possible to continue with 6-8 hours of economic activity and think that we have any sort of depth to the economy. And I know the leaders of the country are very aware of that. So there has to be a balance, I agree. But where we are now is not a good long-term position.
Thank you.
Broad answer.
Good answer. Has there been a significant fall off in the demand from fast food chains? If yes, how significant?
Yeah. Listen, what we've seen, again, a broader answer. What we've seen, gentlemen, is that the fast food restaurants, caterers, cook shops, those sort of things have been very, very negatively impacted by the restriction, the economic restricted hours, the curfew. We have actually done the math that we can say if the curfew moves from 8 to 9, what our demand curve would change by 1 hour. And the resulting economic activity, usually you see about a 2-week lag, but it's very direct to the hours of the economic activity, you know. So the answer, short answer is yes. That segment has gotten hammered.
Right. And basically until we get back to a much longer economic cycle, it's likely to stay that way.
Yeah.
Chris?
But there again, that can only be good, eh?
Yes, for sure.
That can only be good.
Barry?
Yeah, well, I want to expand on Mr. Levy's point about the business hours. So I was told by a leading fast food chain that one of the biggest sale periods for them is between 6 to 8. So we're looking on 2 hours of economic activity. And what we have to remember is that if you have a 7 o'clock curfew, the workers actually start going home from 4 or 5 o'clock.
That's right.
So you're talking about the difference of a few hours, and it makes a huge difference in the demand from the fast food people. So it's a short time and a big difference in terms of economic activity. I don't know what the actual effect of those 2 hours would be on the COVID spread. I'm a bit radical. I don't think the curfew really is an effective tool to manage the spread, but I'm not really running the country. So let us move on to a question.
Thank you, Mr. Berry. A question.
No, but I think on your point, Chris, just before, I think it's important to understand that the economic impact of these decisions can be measured, and we can make economic decisions and life decisions on a real quantitative basis, not just guesswork. I think there's enough data and experience there that we can know what the impact is.
Thank you, and I'm sure leaders have been doing those numbers. Chris, you had a question. Sorry, Barry, you're to pose a question.
My question is, Mr. Levy, you had recently released results. In my opinion, considering it was COVID, they were really stellar. I want you to give the audience a short recap of what the results were and how you were able to produce such great results in such a difficult time.
Right. Well, let me tell you, I think, first of all, the credit goes to the team. It's a very, very difficult time in terms, if you reflect back, there was so much uncertainty. We went through a time of work from home. You went through a time where there was different areas were locked down. We had to actually form our own kind of COVID committee that did our own tracing, because being an essential service, we had to ensure that we were on top of any infection or folks that were living in an area. And the team really responded with a sense of urgency and real professionalism, and I credit them first and foremost. We did go through a restructuring when we saw this fall off in demand curve and if you reflect back to kind of February, March timeframe, there was a great deal of uncertainty of how long and how wide and how hard Jamaica would be hit. And, everybody was making decisions on basically no information. And so we looked at the company and said, all right, we have to really restructure this organization to be as lean as possible. We took some decisions that were very difficult. We parted company with a lot of really talented and great people. And we had to just realign the organization in terms of, like I mentioned earlier, the decision-making processes. I think the results that you see coming out in the first quarter are good, considering all that was going on at the time. I'll tell you, I feel that there is more on the table that we can do, without a doubt, and I think some of that you'll see as the year unpacks, But what we saw was a significant response to the government's decision to reduce the neck and back imports. It allowed the small farmers space to get back into business, which is an essential element of our economy. And it's not one that's really spoken about a lot, but they represent 30% of the production in Jamaica, and importation impacts them directly. And 9 out of 10 small farmers are women, and it helps supplement income. And I think that we saw that segment resurge, and we were really excited because it's continuing to grow and develop very nicely. On the broiler meat side, remember back in the first quarter, we saw a little opening with the hotel sector. We saw some expanded hours in terms of economic activity. And remember, I think we got up to about midnight or something like that, and we just saw the resulting demand for our product, and restaurants starting to open back, starting to get their feet back under them. So I think some of what you're seeing is a result of the demand curve change increase, more so than what I'd say just cost cutting. It's a combination of both. The basic inputs have stayed the same. We've had some devaluation, and the devaluation impacts us without a doubt. It pushes up price. I'm not a fan of the strategy because I think the erosion of wealth, that slow drip erosion of wealth, is destructive to our country and to our individuals. I think our mission as a nation should be to make every Jamaican wealthier. But I think what you're seeing is a stabilization that took place through that time period for a bit. Corn prices were stable, soy prices were stable. We're able to execute well on what I'd call our logistics. And it came together nicely in Q1, you know. So.
Okay. Thank you for that.
You got that?
So,
yeah.
So there's some people who, when they look on the fallout in tourism, you know, the question is, how are you able to produce such great results given that the tourism sector is almost shut? And how was the company able to respond to that?
Yeah. Well, I'll be honest with you, the last quarter of last financial year was a very difficult time. We just saw the collapse of demand in such a short time frame that there was no way we could respond quick enough. And I think what we've seen, again, coming back to the first quarter, is a real rebalancing of demand. You're getting your supermarket segment is up strong, your wholesaler segment is up strong, and that's picking up a lot of the slack in terms of your tourism demand, right. You know. So I'm excited because if we get 60-70% tourism through the next several months, that's only upside for us, and we're excited for that. Excuse me. In terms of the small farmer, as I mentioned earlier, we're seeing that build out again, building up into Christmas inventories. And we do feel that when you look at it, the market has learned, we've learned, and there's been a definite change in terms of what I would call the distribution channels and the logistics that have to take place. If you think about it, when an announcement is made that a curfew or the restrictions, the hours are restricted, remember that restaurant or that hotel has inventory. So they have money locked up there. And we have to make a decision, how do we handle that receivable? It's not that they're running a bad store or a bad shop or a bad restaurant, but their whole dynamic has changed. So we've had to take that into consideration as well. And without a doubt, I feel that it has caused a closer relationship with our customers. And, you know, we look forward to the next few months. We look forward. The U.S. has been a different play. The U.S., our distribution up there is considerably wider. I think that what we see there is the space that we play in on the meat side is a lot more on the bulk. We're getting into the supermarkets, and we're very excited about that. But again, your bulk side got hit pretty hard when all of this broke. There was the same uncertainty we had in Jamaica. It was the same uncertainty we had in the U.S. And we had to really realign our distribution. We started to put chicken in trucks and sell it at our various locations, and it would sell just because the distribution channels in the States are a lot more established and not as flexible. So we took advantage of that, and it really paid off well. I'm not kidding you, you know. So,
I mean, you've spoken on some specific points, but what other measures have you implemented within the company to reduce the risk of exposure to the COVID pandemic?
Yeah, let me tell you, it's a very fluid situation. The virus is highly contagious. We know that, but we're not operating without knowledge now, and I think that's the difference. 6 months ago or 7 months ago, we were guessing this thing. Everybody was guessing this thing, but now we have a better grasp on how it's spread, how it's controlled, how we should behave, and that creates an opportunity. Because that opportunity to take that knowledge and say, we can run a country, run a business, run a household, knowing what we know now, and get back on our feet, you know? And I think it's important that we, and I keep stressing, we've got to get our tourism back on track.
Okay.
Beating
Barry,
the
do you
drum.
have a follow-on question or a new question?
Yes, I do have a question. So what I want to know, Mr. Levy, is, you know, we've been hearing a lot of excitement around your U.S. operations. I want to know what percentage of profits is contributed from the U.S. operations now, and tell us about what's going to happen over the next 5 years if your dream comes true. How is that balance going to change?
I think if you look at the numbers, about 30% of our profits are coming from the U.S. now. And if you recall, we bought that processing plant about a year ago, just about a year ago. And when we bought it, we were killing about 180,000 birds a week there, so that's really small. Right now, we're up to 250,000 birds a week, so we've more than doubled, almost doubled our production there in a year. And that, you have to understand, that not only is it a big investment, but a big achievement, because it's not like the U.S. is short of chicken. So you have to find the markets, you have to work with the customers, you have to be able to present a brand and a product, and then more than anything else, convince the customers that you're a reliable supplier, that you'll be there tomorrow. The U.S. does not tolerate mistakes. It's impatient of errors. And no matter what you might find as an excuse, it just doesn't sell that way. The thing about it is that when we look forward, you have to understand that the U.S. has over 300 million people. So we're operating in a market in one of the most efficient production areas in the world for poultry. And we're carving out our little space. What opportunities that industry presents to a company like us is tremendous. It's tremendous. The 5-year vision on this can be anything you want it to be, because that's what America allows. That's the design of the United States of America, that you can be and grow as big or as large as you want to be. You're not limited by, well, in Jamaica, we're limited by 3 million people on our shores. So I think when I look forward, I think that we have a company on our hands in the United States in particular that can be a tremendous benefit to Jamaica and Jamaica broilers and our staff and the folks that we employ. I mean, right now we have over 500 people employed up there, and we're excited about it. Opportunities are good. That's the basic foundation of America.
So on the note of opportunities, I mean, what are some of the opportunities the business has chosen to capitalize on in this environment?
Yeah. Well, I think if I should say I'm going to approach it in a couple of blocks here. The first block is that we're planning investments on a 6-month horizon in terms of what I would call our various tactical investments, whether it's a piece of equipment, whether it's this. Strategically, Jamaica is going to be a cash cow machine, and she will take space, she will grow, we'll grow with our customers. We do feel that the opportunity for Jamaica is just driving that efficiency. We feel it's a tremendous human resource pool that allows us to seed our culture in the U.S.
Okay.
The growth of the company, what I'd call the needle-moving growth, will come from the United States. There's no doubt about that.
Larger population.
Yep.
So we have a question from social media. At Victor83 on Instagram. His question is, what do you think about the performance of your stock?
Aye, that's a wrong question to ask me, Victor. I think the stock is, I think the challenge, and I'll be honest with you, and this might be getting a little bit off of the reservation, but the challenge with the value of the stock is that when you put it against a benchmark US, So you convert it to US. There is no way that the Jamaican value can keep pace with the devaluation. And that's the challenge that we have here with a policy of constant devaluation, that your stock price cannot move at the same price, at the same speed. It's just not possible. So when you look at it, you have a situation that you're going to have to make investments in stock for a long term. You can't be looking at a company today and think, okay, what's my profits for last quarter? And you've got to look and think, is this company one that's going to be around for the next 5 years, 10 years, that allows the stock market here to kind of correct upwards in terms of value? As I'll give you an example. In the month of July, I think we lost 6% devaluation. So the market cap on the company came down 6% on devaluation in real value, real terms. That's just nothing changed in the company. If anything, the value should have gone up. So I look at it and I think, you know something, now in Jamaica is the best time to buy shares. It's the best time. The dollar is down relatively. Shares are down relatively. And nobody wants to buy. Look at the level of trading on the market. So I want to ask Mr. Pierre, why? What am I missing? I mean, this is the best opportunity I have seen to buy shares.
It is, but we didn't want to say it to everybody because you won't be able to get enough.
Oh, I saw it.
Chris, you have a question?
Yeah, so I want to make a comment on the share price. So I think it is normal for people to be a bit apprehensive when the future is unclear. And I think COVID definitely put a cloud over everything. But the silver lining, which I see, is that if you have a company that you can buy in JMD that is growing internationally and you already have 30% of the contribution in hard currency, and that is only likely to increase, then I would say to the long-term investors, you know, you don't often get a chance like that to buy in JMD with a US growth element, which is, you know, I mean, virtually unlimited if you compare 3 million people to 360 million people. So that's what I would say about that.
I would make a comment, Chris, since we're kind of more discussion forum. That's all right?
That's fine.
That's all right. I think the future is pretty certain. I'll be honest with you. It's not unclear at all. If you take what we know and
in terms of, what I mean, Chris, is in terms of the whole COVID situation.
Oh, yeah,
where you have
even then.
Where people had never seen COVID before.
Sure.
So that affects how they feel about the future, and they tend to pull back from investing.
All right.
Is what I mean.
Well, it's the brave ones that first mover advantage is called first mover advantage for a reason, right?
There you go.
Yeah.
It is. So yes, you're giving away all the secrets.
I know I'm talking too much.
No. That's fine. You know, all those people who actually tuned in will benefit from it. So next time they'll tune in earlier. Another question from social media. You'd love this one. All praises be to, from Instagram.
Right. Praise the Lord.
How do you foresee someone capitalizing from this crisis in terms of investment options available?
Thanks. That tees up my point nicely. Thank you very much. Praises. You see, I look at it and think, where are we as a nation? Where are we as an economy? Where are we as a company? First of all, let's take what we know. We know that the economy can't stay like this. We know we can't stay in a lockdown period like this for any extended period of time. It's just not sustainable. We know Jamaica cannot exist without a tourism industry. We know that. So those things must correct. Now, whether they're correct in 6 months or a year, but they must correct. So the opportunity to invest is now. The opportunity to invest is now. And the thing about it is that it's not a matter of looking and thinking, okay, well, am I going to make money next month? No. That's not the investment you're looking at now. The investment you need to be looking at and saying, where am I going to be in a year? Where am I going to be when this economy opens? Because that's the opportunity before us, knowing that the environment we're in is not sustainable. So it has to change. And what is going to change too is where you want to be early.
Thanks. Another question. This one is from @RomeoScott on YouTube. We've been seeing recently where directors and managers of the company have been purchasing shares in the company. Is this a sign of confidence going forward for future growth?
I would tell you, Jamaica Broilers, in my opinion, is always a buy. You know what I mean? But directors, managers, executives, they will buy and sell as their personal needs and personal objectives. You know, everybody is in a different space at a little different time. So I think without a doubt, the confidence though that the board and the executives and the management and the team has about the future Jamaica Broilers is unprecedented in my experience. You know, I think we're very excited about the future. I think that the opportunity before the company is great, and so some will buy, some will sell, you know, based on their personal times. But it's more than just what they're doing with their own personal money.
Thanks, Chris. So we'll give the questions a rest for the time being. The exchange rate for the Jamaican dollar in respect to the US dollar was $149.29 as at the end of August 31st, 2020, which works out to a depreciation of approximately 12.6% year to date. The depreciation of the exchange rate to date was underpinned by a tightening of US dollar liquidity, obviously due to a decline in inflows primarily from tourism. The slow recovery in this sector since the reopening of the borders in mid-June 2020 has also influenced the performance. For the month of August 2020, there is a pickup in foreign exchange demand versus the prior month, according to the Bank of Jamaica, which led the exchange rate adjustment. Through efforts to ensure continued orderly adjustments in the exchange rate, the Bank of Jamaica sold approximately $30 million US into the market on August 18. According to Richard Biles, governor for Bank of Jamaica, we also offered a US dollar index bond to investors seeking a hedge against future exchange rate movements. This comes on the heels of several prior initiatives to provide extra liquidity into the foreign exchange market since March of this year, including B-fixed flash sales, direct sales to players in the energy sector, extending off a foreign exchange swap arrangement, and providing a US dollar repurchase facility and reducing the foreign exchange currency cash reserves. Furthermore, the country's gross reserves remain high, as the Bank of Jamaica reiterates, if judiciously managed, will be adequate to see us through this temporary crisis. Sure. So, based on that, gentlemen, Mr. Berry, Mr. Levy, how do you expect the economy to be impacted generally by this foreign exchange activity, and more importantly, specifically to your business going forward? Berry, you want to lead the conversation?
Oh, sure. So I think my biggest concern is really not about the value of the currency. I think, like Mr. Levy, I think the whole currency situation is designed around a perpetual devaluation. I personally don't agree with it, but I'm no economist, so I don't really have any talk in that room. What I have noticed in Jamaica is that over the years, Jamaicans have learned to cope with devaluation. So Jamaicans can cope with devaluation. What they can't cope with is high interest rates. So the biggest risk I see going forward is the job losses and the business disruption that is a direct result of COVID. That's where the demand is going to be impacted. That's where the jobs are going to be lost. And that's what's going to affect the P&L of the listed companies. So this is where we need to focus on, in my mind. We need to try and minimize the job losses. We need to try and focus on creating new economies and new business opportunities and minimize the job losses and the fallout of economic opportunity.
Thank you, Chris. You're emphasizing minimization of job losses. Levy, what's your view?
No, I agree. I think that I don't think we've seen the full effect of the last 7 months yet. PIOJ gave us an indication of some of the challenges that we face. I think without a doubt, I like to put it this way. The medicine that you take for a headache can't be the same medicine that you take for flu. It's not the same. Jamaica has flu, and I think that the challenge that we face, and it's not our fault that we have flu, but what we need to do is recognize it, and I think the leadership of the country does recognize it. But the same prescription can't work. We've got to change tack, and I think it's coming back to focusing on the opportunities. We need damage control, there's no doubt about that. You know, the NIR is a rainy day fund. Well, if it ain't raining now, tell me what rain look like, you know? And I think what the governor has done and indicated is significant in terms of just stabilization and confidence building and just calming everybody down. But what we need to recognize is we're kind of moving out of that phase a little bit where we have to lay different foundations now, and some of that is job losses, getting people back to work and get them back earning and building back that confidence that we'll be fine as a country, that we'll be fine as a nation and as a company and as individuals. As I'm meeting with some staff this morning, and what we've been really talking about in Jamaica Broilers is hope. Hope obviously in Jesus, but hope in that particular situation that you're in. And I think that's where we need to be as a nation now, recognizing that there is a future, that we have a hope for the future, and start to define what that will look like, you know, because I'm very much, I kind of like being out there a little bit more, because if not, you get married in the now, and you can't see the forest for the trees. And what you find is that your decision making then becomes from a fear-based and not a hope-based, not an opportunity-based. And I don't like making decisions out of fear. You know, I don't think they're productive. I don't think they're right decisions. So I think I don't think there's any one solution. I agree with Mr. Berry. I've said it many times. I think the constant devaluation strategy is wrong. But there are smart people down there. I don't have all the information, but I can tell you the road we're on we need to change a little bit. So.
Thank you, Chris. Well, I mean, the fact of the matter is that from June 2018, the economy has been declining. The growth rate has been declining since June 2018 on a consistent basis. It hit 0 in the December quarter, negative in the first quarter of March, and then super negative in the June quarter. And then obviously we need to find a point at which it settles, and then how do we get back on growth? But you know, which carries us to the next discussion, because at the end of June 2020, there was a general reduction in money market rates, which was reflected by loosened liquidity conditions in the market. In the context of the Bank of Jamaica unchanged monetary policy and loose monetary conditions, the Bank of Jamaica kept the benchmark interest rate steady at 0.5% at its August 18th meeting. The policymakers noted that inflation conditions are generally appropriate to support inflation, remaining within the target of 4% to 6%. As we begin the last quarter of 2020, the Jamaican dollar fixed income market has remained liquid, with overnight placements of deposit-taking institutions with Bank of Jamaica averaging 35 billion Jamaican dollars. The overnight rate stood at 0.3% to 0.5%, whilst the 30-day rate has been within the range of 1.3% to 1.6%. The Bank of Jamaica CD auction has also seen an average yield of 0.65% over the last 6 months, and is expected to stay within the range of 0.6 to 0.8% for the rest of the year, as there is a need for liquid assets amongst deposit-taking institutions. In addition, the Treasury bill auction has seen yields for 91 days at 1.15% per annum, 182-day auction 1.25%, and the 273-day auction at 1.5%. These yields are expected to remain within the range of 91 days, 1.1 to 1.25, 182 days, 1.2 to 1.35, and 273 days between 1.45 to 1.65. There will also be a maturity of a Government of Jamaica variable rate 2020 bond in October 2020, which is expected to pay out approximately 89 million Jamaican dollars. With that in mind, the Government of Jamaica has reopened the fixed rate 2023 bond and the 2037 bond, as well as the 2050 bond, expecting to take up $22.5 billion. The anticipation of the market is that the Ministry of Finance will issue or reopen additional Government of Jamaica securities to mop up excess liquidity, allowing rates to remain stable. The US dollar fixed income market was also liquid, with overnight market rates at 1.5%, whilst 30-day market rates have been within the range of 1.7 to 1.9%. The US markets is forecast to reduce in liquidity as the impact of COVID-19 on tourism reduces the inflow of US dollars in the marketplace. So again, gentlemen, what you're seeing, I mean, it's been years that you could actually hear that Jamaican interest rate ranges from 0.3 to 1.65% per annum. So Chris Levy, what's your view on the interest rates and business?
Wait a minute, I grow chicken, you know. That's very technical stuff. I do feel that interest rates, though, should be higher. I think that they are low. I think it's a tool that needs to be exercised. I can't tell you what they should be, but I do feel that when you look at it, there is a need for what I would almost call another element in play. I know that's a bit controversial, but I think when I look at it, the challenge that we face is, it comes back, we need different medicine right now. You know what I mean? I feel the US, the liquidity from what I'm seeing and hearing, I think the US liquidity is going to be good.
Yes.
You know, I think that there is some events that are taking place that's going to create a fair amount of liquidity in the economy, and thus kind of the interest rate discussion, you know.
Okay.
So that's, but I grow chicken, you know, so.
No, well, that's a very good chicken analysis. Barry, interest rates, too low, too high, perfect?
Well, I like low interest rates. I'm a stock guy. So low interest rates suit me.
Yeah.
Well, I mean, if you see what is happening in the U.S., you know, especially in times of stress, low interest rates is perfect to help to restart and get the economy going. As I indicated to you guys before, the economic growth rate of the country has been stagnant, for want of a better word. And I mean, as I said, it has literally fallen off a cliff and has erased probably 5, 6 to 10 years worth of growth in the country. So, you know, whilst employment is a key issue, another big issue which I think works for you is consumption.
Yeah.
Because that is one of the biggest elements of the growth rate. And the question I'll pose to both you guys is, what can be done in the short term to get consumption up within the context of these curfews and reduction in economic activity?
It's going to be tough, in my opinion. I think it's going to be very difficult. Like I said, we've done the math and can figure out what our demand is or what the consumption is relative to our products with each hour of opening or closing. So if the government decides that they're going to reduce the hours, the economic available hours by another hour, we can know what our demand, what customers are going to get hit, how much they're going to get hit by, and we can adjust. That's the minutia we've had to get to. But the converse is true. They add an hour, we know what's going to happen. Just like Chris was saying earlier, you know, the economic activity for restaurants is between 6 and 8, and it's a spike, and a huge spike. Once you're out of that sweet spot, everybody's going to get hammered. you know. So
So do you believe there's a way that you could a sweet spot
Thread
in a
the needle.
different way where you find that middle ground?
sure, I think that there are protocols that have to be considered, gentlemen, that, you know, and we're talking here about the local economic activity, or the internal velocity of our economy, and changing those hours. The bottom line on it, though, is if we don't have new money coming in, you're paying Peter to collect from Paul to pay Peter to collect from Paul, and just going in a circle. That's not a sustainable model, and we know that. And I think that a combination of what I would call more economically friendly protocols, a strategic, deliberate opening of our tourism industry, and the corresponding, what I would call support services, that's everything from buses to tours and this sort of thing. We know how to live with this thing. We know we don't have to be as afraid as we were in February and March. The environment is different. We have more knowledge now. We have more experience now. Yes, it's still a reality, but the reality can no longer dominate us in the way that it did back in those days. And I think we have to move on from that a little bit. Yes, prudently move on, but definitely move on. So, my thoughts.
Thanks, Chris. Barry, can you give us some final thoughts on how you would stop this economic decline and at least get it to turn around?
Well, the quick fix, obviously, is to focus on more effective means of preventing the spread of COVID. I personally don't believe that curfews are effective. I think education, mask wearing, and social distancing have a much greater effect on COVID transmission than curfews. So, you know, to me, I would end the curfews immediately. It's a waste of time and a waste of money. And I would focus on trying to make it very simple and clear for tourists. How do you come to Jamaica? And put in protocols that keep the tourists safe and keep the Jamaicans who serve the tourists safe.
Yep.
So if people feel safe, they will come. If we don't do that, we're actually going to be in a worse position, because what's going to happen is that there are other countries that are being very aggressive, and we could very well see the market shift from ourselves to other places. You know, the hard fact of life is that whenever you have challenges, the challenges don't go away. You have to face them and find ways around them. You can't ball up in a corner and wait until the challenges pass. That's not real life. Today's COVID, tomorrow's going to be something else. So we just have to go out there and face the music, get the economy moving, and we'll be fine.
Yep, I agree.
Thank you, Chris. All right, guys. At the end of the day, one of the things that Mayberry does, or the main thing Mayberry does, is to buy and sell stocks for themselves and their customers. So I'm just going to run through 9 quick tips for buying and selling stocks, and we wrap up the night. So number 1, get an account. You know, there are several stockbrokers out there. We think Mayberry is the best. So come to Mayberry and open an account for you. The second tip is to research your companies. Tonight you have heard from Mr. Christopher Levy, President and CEO of Jamaica Broilers, and he has been speaking about his company. Well, notwithstanding the sage words that he has said tonight, there's his annual report, there's his website that you can get some more information on, so you feel better in buying the Jamaica Broilers stock. Thirdly, get educated. You know, a lot of the information for stocks are in financial statements. You need to understand the accounting presentation of those financial statements and what it means. Fourthly, get more advice. You cannot get enough advice. You know, so you speak to experts, you speak to people who might work at a company, who might understand the business. And as you do that, you extend your information set. Number 5, invest in well-managed companies like Jamaica Broilers, companies like Mayberry Investments, Supreme Ventures. You know, because well-managed companies over time will always give you the type of return and growth rates that you want in the business and ultimately drives profits. Number 6, buy low and sell high. You know, this is what everybody wants to do, but this is what it is. And there's some people, for example, Christopher Levy, who thinks now is a good time to buy because in 5-10 years, you'll realize that buying today was the low, and in 5-10 years, that's the high if you chose to sell. Number 7 is diversify. No matter how great a company is, it's still one company. So, you don't want to have all your eggs in one basket. There are several companies in Jamaica that you can take advantage of. I mean, what has happened is that Jamaica Broilers now is basically showing that, hey, they're one of the COVID-resistant companies because they have now learned and they have now understood how to take advantage of this pandemic. Number 8, the term is referred to as averaging down. What does that mean? There's some people who always try to find the right time to buy the stock, when the stock is at its lowest and they want to then sell it at its highest. Well, what we have found over time is that if you consistently buy, meaning every month you get your salary, you take out 5%, 10%, and you buy stocks, you will find that over time, because you're not trying to gauge the right time, you'll end up building a very, very nice portfolio. Finally, take profits and reinvest gains. There's a statement I live by. You never go broke taking profit.
No, sir.
You buy stocks to benefit from stock. You don't buy stock just to look at it and speak about it. So you're there to make money. When you have made the money, take it, and then you look at reinvesting. Guys, all you out there in social media, I want to thank you. Thank you for all being a part of this month's Virtual Investor Forum. I would also like to thank our special guest, Mr. Christopher Levy, and also Mr. Christopher Berry for being able to join us today from afar. It has been an insightful discussion. While the pandemic continues to plague Jamaica and the world, you need to be aware of the market remains a top priority. You need to be aware of the market. The Mayberry family feels honored and privileged to have the opportunity to continue providing a platform through which investors and potential investors are able to receive the guidance they need. For more than 30 years, Mayberry has been dedicated to equipping ourselves and others with the knowledge needed to secure financial freedom. We're certainly looking forward to doing that and so much more for another 30 years to come. Ladies and gentlemen, thanks again for tuning in today to join this forum. And remember, wise investors, slow and steady always wins the race. Good night.
Thank you very much.